Hi, this is Tony Gipreos from Axion Financial Group. Thanks so much for joining us again today. In this video, we're going to discuss what is the definition of passive investing and active investing, and what's the difference between them. Thanks so much for joining, and stay tuned. You might have heard the terms before, passive and active. But what exactly does passive and active investing mean? In layman's terms, passive investing is typically a broad index of a certain asset class. For example, an exchange-traded fund or a mutual fund that owns maybe 20, 30, 100, 500 different companies within. It's passive because the person that is investing in that vehicle is not selecting which company is going to do better and which company is going to do worse, but they're owning a whole broad basket of companies that make up an index. That's typically passive investing. You can do it with stocks, you can do it with bonds, you can even, these days, even do it with some real estate. It's basically owning a large swath of an asset allocation bucket, but it's not choosing individually what you think is going to do better or worse. That's passive. What's active investing? Active investing is exactly the opposite. It's selecting and choosing which companies or which underlying loans, depending on the strategy, what it is. It could be a myriad of things. What type of investment is going to do extremely well, and not choosing the ones that you think will not do well. That's active investing. What we have found in our investment career here at Axion Financial Group is that a portfolio of a mix of passive and active investing is actually the best combination for investment success. In asset classes such as, say, large cap stocks, many times passive investing has been the best historical performer, owning the broad-based index, because over 85% of active public stock managers typically cannot beat the index over a multiple year period. And so we found that passive investing via low-cost ETFs or mutual funds is in many ways the best way to do it. But active investing, which is more detailed security selection, and you can find the type of investment vehicles that are always active are hedge funds, private equity, venture capital. A lot of the private and alternative funds that we deal with would be considered active investing because they're actively selecting the type of investments that fit their criteria, that fit their parameters, and they're being selected because they think they're going to do better than others. Active investing typically goes hand in hand with private market investing. So for our portfolios, we use a combination of passive and active, and we've found that that is the dynamic combination that over time can actually be the best way to have a very nice portfolio return over the years, but also do it in a risk-adjusted manner with lower standard deviations and some other better risk attributes than a purely passive portfolio and also a purely active portfolio. Thanks so much for joining us today and learning about what passive and active investing are. If you want to learn more about our strategy and details about what type of strategies we use for passive and what type of strategies we use for active, please let me know. Thanks so much for joining, and have a great day.